hello, Olawumi, Olatunji. How are you doing?
I'm fine. Good morning. Good morning.
Sanskriti Kapoor, I can see you. How are you doing?
Hi, Gifty. I'm good. How are you?
Fantastic. I'm doing awesome. I've been good. Nana, yeah, if we, how have you been?
I'm very well, Gifty. You?
Oh, I've been
It's been
okay
a while.
too. Holding up well. It's good to see you. It's good to see all of you. I think at this point, we have just two of our speakers who are yet to join. I mean, one speaker and then one moderator. And even before they do so, we're going to go ahead because I'll do a little bit of a presentation on the CGIA, probably for like 5 minutes. I'm sure by the time we're done with that, we'll have Sejal join us and then Divya as well. And so let me officially say welcome to every one of you. Particularly to our speakers, a very big thank you for accepting to share your insights with us, with our audience, and want to say a very, very big thank you. On behalf of the CGIA Institute, I want to welcome every single participant who has joined us here this morning. Probably you're joining us from any other country as an afternoon or as an evening. Sanskriti, what time is it at your end?
It's 3:30 in the afternoon here.
Exactly. So I'm sure there are people joining all the way from India, Mumbai, and other places, and it's in the afternoon. I see a big good afternoon to you. I see Divya has also joined us. Thank you so much for joining, Divya. How are you doing?
Hi, Gipti. Thank you so much for the opportunity. I'm well. How are you doing?
Oh, I'm doing fantastic. I've been good. I've been engaging with our speakers for a while now. Thank you for joining. So we have all speakers here except Sejal. And I'm pretty much sure by the time I'm done with the presentation on the CGI, she would have joined us as well. Once again, official welcome to every one of our participants. This summit is organized by the CGIA Institute, the Chartered Global Investment Analyst Institute, that is headquartered in New York, which happens to be a professional qualifications for finance and investment professionals. This is an annual summit that we host. Normally we have the in-person one, but this year we happen to have the virtual session, giving us access to, diverse kinds of speakers from different countries. And we are so grateful for this privilege and this opportunity. In the next few minutes, please, if you would permit me, allow me to share my screen so that I tell you a little bit about the CGIA. Thank you so much. Great. So I hope that everybody can see my screen at this point. Okay. All right. So I mentioned earlier that the CGIA simply stands for the Chartered Global Investment Analyst, and it's basically a professional body of finance and investment professionals. And so I'm sure most of you have knowledge of the likes of the ACCA, the CFAs, exactly the kind of professional body I'm talking about. In the next few minutes, let me just tell you a few things about the Institute. So the CGIA Institute, literally, these are some of the things that when you become a CGIA or you join the Institute, these are some of the things that you benefit from. You are set to secure some deep knowledge, some great expertise in the finance and investment industry, because the profession we are in as finance and investment professionals, most and every single time there are updated information in the industry, people are growing in the industry, and you need a professional body that you can grow with. Normally people go to the universities, and I always say that a university will always be only for 4 years. When you do your master's, it's for 2 years. You do your PhD, probably 4 years, 6 years. But then when you join a professional qualification body, what happens is that it becomes a body that you join for a lifetime. And so every single year, you have this body giving you updates on what is happening in your industry. And so that makes it very, very important. Membership. We have 3 different types of membership in the CGIA Institute. We have candidates, we have charter holders, and then we have fellows. Now, a candidate is a registered member who is still writing exams and is yet to complete their entire examination with the CGIA Institute. Charter holders are people who have gone through the entire levels of the CGIA and have been awarded the CGIA charter designation. And so even right here on this platform, we have Olawumi Olatunji, who happens to be a CGIA charter holder. Nana Ya Efriye Ofurikorie is a CGIA charter holder as well. We are so proud to call them charter holders of the Institute. Now we move to the next level, which has to do with the fellows. From what I've written, this is the highest level of membership status with the Institute. Distinguished professionals are identified and are awarded the fellowship by the Institute. And so people who probably have been in the industry are doing so much in the community, either regionally, globally, they are doing so well. The Institute is able to identify them and then confer on them this fellowship status. Membership eligibility. Someone is here and you're asking, how can I be a part of the CGIA Institute? Do I need to have a finance background or do I have to have an investment background? What exactly are we looking at? The CGIA is actually open to a broad range of members from across various industries, from across various backgrounds. And so you don't necessarily have to be in the finance industry, but if you're looking to have a career change and you're looking to pursue a path on the finance, in the finance industry, then of course, the CGI Institute is your go-to, and then you are eligible to be a part of it. However, if you have a background in finance, of course, it gives you an advantage over someone who doesn't have, because you do not necessarily have to start from the level 1, but then probably you jump to level 2 or level 3. So this is the exam structure for the CGIA. The CGIA has 3 levels, and then the curriculum consists of 14 examinable papers that is structured in 3 levels, like I said earlier. Level 1, you take 4 papers. Level 2, you take 6 papers, and then level 3, you take another 4. Once you are done with these 3 levels, then the CGI can say that, okay, you are qualified to gain the charter designation and use the 4 letters CGIA after your name. So you're looking at the examinations that you're going to take. What is the pass mark? You do not necessarily have to make a 70%, but 50% of the mark gives you a pass to move on to other levels. Each one of our examination is written via our e-platform. Almost every single thing that concerns the CGIA has to do with an online application. It has to do with writing exams online. And so it doesn't matter where you are in the world, you get to sit for our exams, you get to be a part of the CGIA once you have access to internet connection. Okay, so these are the levels, level 1, level 2, these are the papers you're looking at. Level 3, these are the papers that you're looking at exactly. All right, so this is the exam structure. 70 multiple choice questions for level 1, level 200, and then level 3, 140. Now let me go to the fee structure, very, very important. So with the fee structure for the CGIA, each paper you write in level 1, I made mention earlier that in level 1, you write 4 papers. Each paper goes for 45 USD. And of course, that's for early registration. And once you do your registration early, you get to avoid any unnecessary payments along the line. And so 45 USD for early registration. Level 2 is 65, and then level 3 is $80 per paper. And then you write 4 papers, level 1, 6 papers, level 2, and then another 4 papers, level 3, making 14 examinable papers in all. I'm sure some of you are here and you're asking, does the CGIA give exemptions to people who have already done similar courses with other institutions? Of course, we have our exemption policies. And then if we see, according to the documents that you present to us, if your transcripts, your certificates reveals the fact that you have done some of our courses in your previous academic qualification, then of course, you are eligible to be given some exemptions. All right. So with the exemptions, we have 2 particular parts. We have the regular exemptions where Probably you are done with your master's, you're done with your first degree, you get to be exempted from level 1 papers, you write from level 2, or you get to be exempted from level 1 and 2, and then you write from level 3. However, we have the special exemptions gateway, where people who have been in the industry for 14 years and above become eligible to gain the designation without writing any paper. So these people are given exemptions from level 1 to level 3. These are people who have a minimum of an MBA in finance and who also have a minimum of 14 years experience in the finance and investment industry. And such people, what we are very keen on is the CPD, the continuous professional development programs that we hold every single year. So such people are given the opportunity to update their knowledge in the field with our various events, with the various training programs that we have. And so if you're here and you're qualified for the SE Gateway, please do reach out to me or reach out to the Institute, either via our website, via our email, and then we'll reach out back to you. I think basically these are the kind of things I'm going to say. And so let me end here with the presentation. Of course, there is one other feature the CGIA introduced somewhere last year, which has to do with our membership verification status. So if you're a member of the CGIA and then you tell an employer you're going for a job, and then you tell an employer that I am a member of this institute, I'm a charter holder, the only thing that the charter holder has to do is to come to our website. We have a membership verification button that they could log on to, and then they would see your name and they will see whether you are in good standing with the institute or otherwise. And so we have everything put together for your growth, for your acceleration as a finance professional. Please do join us and let's all become a big family. I look forward to having some of you become the CGIA charter holders. I look forward to some of you becoming members of the institute. On this note, I would say a very, very, very big thank you. Okay, so that was a brief presentation on the CGIA. Thank you so much. Oh, Sejal has joined us. Hello, Sejal. At least let's hear your voice.
Hello, everyone.
Great, great, great. It's good to see you. It's good to have you here today.
Thank you. Thanks for having me.
All the speakers have been waiting for you.
Oh, sorry.
Great. So in the next few minutes, I'm going to hand over to the moderator for today's session. I'll read a brief profile of Divya, and then I'll hand over the platform to her so that she can take us through today's session graciously. Right. Okay. All right, so I read just a brief profile of her. Divya is a meticulous student and a professional with experience in finance. She has completed her bachelor's with India's prestigious University of Delhi and is now working towards a master's with UK's esteemed Warwick University. She has also been awarded the Commonwealth Scholarship, which gave her the title as a Commonwealth Scholar by the government of UK for her excellent academic record and her vision of community welfare. Divya has always been interested in finance and investment, gearing up for evolving ESG regulations by KPMG. She has always been an active participant for ESG contributions across industries. Ladies and gentlemen, I want to hand you over to our moderator for today, Divya Kaushik. Divya Kaushik. I hope that I hope that I'm good with the name. Sure.
Yeah, it's pretty much similar. Thank you so much, Gifty. And hi everyone, I'm Divya Kaushik, your moderator for the day. First of all, I would like to thank everybody for joining the summit and showing your interest in our today's topic of the next phase of ESG, driving sustainable finance in today's world. Here we will discuss about ESG and its utmost requirement in our fast-paced global economy. We will also learn about how corporations can work towards sustainability and make changes in its business models to achieve its economic, social, and governance goals. Today we have our esteemed panelists with us. who will further explain the topic, followed by a Q&A session where everybody participated here could ask the questions and discuss the points you have. Plus, I would request all of you to kindly ask your questions in the chat box, and we will take those questions one by one and we'll try to take as many doubts as possible. So, commencing with the session, let me introduce you all to our first panelist. Meet Miss Sanskriti Kapoor, Vice President, ESG and Impact at Omnivore VC, where she applies her expertise in ESG assessments, strategy creation, and implementation to foster sustainable and impactful investments. I welcome you, Sanskriti.
Thanks, Divya, and thank you everyone for joining and taking out the time to listen to this, ever evolving topic. So basically, should I be expecting a few questions, or should I just, maybe ramble
No,
about?
let me just introduce the panelists first. Thank you so much,
Sure.
Sanskriti.
Yeah.
Okay. Our second panelist is Nanaya FBI Ofori Kori. She is the head of partnerships and sustainability and CSR at Fidelity Bank Ghana, where with her 20 years of experience in business, she leads in shaping the corporate landscape through strategic initiatives that deliver value to diverse stakeholders. Welcome, Nana.
Thank you, Divya. I'm very happy to be here. And good morning, good afternoon, everyone who's on the call.
Thank you. Okay, so our third panelist for the day is Olabunmi Olatunji. She is the CEO and Principal Analyst at Brockville Investments Limited, where with her 15 plus years of experience, she provides expert guidance on investment projects within the energy and natural resources domains. Welcome, Olabunmi.
Thank you very much, Divya. Thank you, everyone. It's good to be here.
Thank you. Okay, so our fourth panelist for today is Sejal Vanzare. She is an ESG analyst at Black Soil Capital Private Limited, where she plays a pivotal role in driving internal ESG initiatives, conducting ESG due diligence for potential investees, and supporting company in enhancing their ESG performance. Welcome, Sejal.
Thank you so much. Thank you.
Okay, thank you so much for all the panelists for joining. So now I would like to ask Sanskriti to commence with her presentation. Sanskriti, please go ahead with the presentation.
Sure. Gifty, I shared it with you. Would you mind sharing your screen? Is that okay?
Okay, that's fine. Give me some few minutes.
Sure. So meanwhile, maybe I can go ahead and give a brief introduction about Omnivore, which is, so Omnivore is a venture capital firm based out of India. And Omnivore basically invests in entrepreneurs that are building future of the agriculture and food systems by, application of technology, innovative solutions, addressing the need of, I would say rather addressing the critical need of building impact systems and ESG platforms, especially in the field of agriculture, so that they are able to promote sustainable agriculture consumption practices and efficient agricultural practices as such. So that's a brief about Omnivore. We started in 2012. We have close to 30 plus companies in our portfolio as of now. There are 6 themes. I'll just quickly go through that as well, based on what we invest, based on how we identify entrepreneurs in whom we will invest our capital into. These are basically platforms that, either are providing any kind of fintech facilities or, efficient credit insurance to the farmers. Then there are B2B agri marketplaces as well that connect, different parts of the value chain of agriculture system. There are agri-food life sciences that help in research and development of new products or novel products that help in sustainable consumption. Then there is precision agriculture that help in, increasing crop yields, increasing different kind of via utilization of robotics, via utilization of different automation equipments and everything. Then there are post-harvest technology that help in storage, warehousing, traceability, food processing, etc. And then the final one is the farm to consumer brands that basically help in direct sourcing of food and different parts of the food value chain to the consumer. So this is all about omnivore, I would say. And Gifty, are you sharing your screen, or maybe I can just go ahead? Okay, so maybe I can, just keep on talking about this. And this is an ever interesting topic and also ever evolving as well, on why is it that, ESG is needed in the agriculture value chain, or why is it that we are as investors looking into financing or looking into ESG integration and investing via our capital. As you know, all of you would know that agriculture AFLU industry is one of the highest emitting carbon or GHG emitting sector, and it's a highly regulated, yet the need for sustainable practices in this industry, the need for small companies or the startups that are coming up in this industry to have ESG integration and sustainable practices so that they are able to further promote that in their own supply chain is absolutely necessary. There is a environmental cost due to climate impact. There are driving regulations that are coming from investors. There is ever evolving technological innovations. There is regulatory pressure that is coming from the government as well. And of course, there's global food demand too that is increasing. So because of that, one, it is absolutely essential to identify right entrepreneurs that are able to meet this growing demand of solving the problem in hand. What is the problem at hand, you would say, is basically increasing the crop yield or helping the smallholder farmers. 90% of the farms across the world are owned by smallholder farmers. So the definition of smallholder farmer might, differ from country to country. In India, we define it as something, any farmer that holds below 2 hectares of land. Globally, it differs from 2 to 10 hectares of land. So increasing the crop yield for those, identifying right entrepreneurs who are able to help in research in research of technological innovations, in research of right equipments, manufacturing of right equipments for these smallholders, identifying right inputs and outputs. If by inputs, I mean right seeds, the biologically or organically modified seeds inputs. By hardware or outputs, I mean, just giving an example, a large tractor might not be good enough for, a farmer that holds less than 2 hectares of land. So identifying the hardware requirement for them so that they're able to grow food or grow crops sustainably in their own small ecosystem that they have built. All of these are absolutely necessary. And that's why we feel that if we are promoting the demands and the needs of these smallholder farmers, via identifying those entrepreneurs who are helping these smallholder farmers do it, it is absolutely essential that these entrepreneurs are building systems or building companies or building startups that are sustainable in nature. And by sustainable, I just don't mean that, they are promoting practices that have less carbon emissions or less GHG emissions or anything that is related to only environment. Not just that, but building companies that are able to that are resilient enough that they are able to withstand the pressure of regulations, withstand the pressure of these technological innovations, advancement, withstand the competition, withstand different kind of pressures that are building up in the environment, in their ecosystem, by building good business practices. So I always say, and this is, something that is absolutely I mean, I imbibe that in my professional journey, is ESG, how it is defined. It is generally for big businesses. For small businesses, for startups, it is essentially good practices. When you have every system in place that is enabling you to have a company, to have a startup, or to have an organization that is able to sustain in the longer run, and then eventually solve the problem in hand for which you started the organization. So that is an absolute requirement. And with that vision, we at Omnivore, and I'm 100% sure there are so many other fund managers as well who are doing this currently, is integrating ESG into their investing practices as well. So that was, all I had. If there are any questions from Divya or any, anyone from the audience, would love to hear those.
No, thank you so much, Sanskriti, for the insightful presentation. It was really informative and helpful. I hope a lot of people got to learn a lot of points from this. Now I would like to move towards the next presentation. We will be taking a Q&A session at the end of the summit. So next, may I ask Nanaya to please present your presentation?
Sure, Divya, thank you. Give me a second to do that. And if you don't see the presentation in a few seconds, just let me know. Otherwise, I can start. I'm assuming everyone can see.
Yes, it's visible.
Brilliant. Okay, so when I was invited to talk about ESG, which I prefer to refer to as sustainability, I was wondering the best approach that I should discuss this, because that's a very broad topic for discussion. And having been in this space for quite some time, I always find it's very important to set the basics right? So my presentation is going to just set the scene so that we can go into discussions and be more interactive in the Q&A sessions. When I was being introduced, one of the things that was put across is that I've been in this space for quite some time. So I've seen the evolution of sustainability across different sectors, and I've seen that evolution from looking at it from a compliance perspective, from a risk management perspective, to a value creation perspective. And I think that the point that we're at, particularly with the finance sector globally, and the way that that whole global architecture is changing, if there's any financial institution who is not aligning to sustainability or ESG, they will be left behind. So with that being said, just a little bit about my organization. I work with Fidelity Bank. It's the largest privately owned bank in Ghana. So it's founded by Ghanaians. So we are very patriotic in what we do. And our work is also towards supporting national development. So the whole discussion around sustainability, around development, around ensuring that we're building a resilient country and organization is very, very deep and dear to us. We have a footprint across the entire country, and we have a sustainability department dedicated towards everything we're going to discuss today. Prior to setting up the sustainability department, we had something called a partnerships department, and it focused on sustainable finance, even though at that time, it wasn't necessarily recognized as being sustainable finance. So now what we have in the bank when it comes to sustainable development activities is we have a unit which deals with sustainable finance, a unit that deals with sustainable operations, and then a unit that deals with all the charitable activities. And that is merged together into the Partnerships, Sustainability, and CSR department, which I lead. But this presentation will solely focus on sustainable finance activities in the bank. I really like this nested dependencies diagram and image that you're seeing, because it always centers for me where businesses sit when it comes to the interaction between the environment, society, and the business, right? This sums up to me what every organization should have as at the heart of their purpose. Because from this, you can see that we're existing within limits of the environment. And no business will exist without a society. And certainly the society is not going to exist without the environment. So when you're looking at sustainability and you're looking at ESG, you're considering the environmental issues, you're considering the social issues, you're having the right governance framework, you're looking at economic sustainability and ensuring that you exist into the long term. You are positively impacting society and environment, and also very important, you are reducing your negative impact on the society and the environment. So this image is very, very poignant to me. So it always reminds me of the purpose of the work that I'm doing within the bank. And I hope that you find it useful as well. I just wanted to talk a little bit about sustainable finance and how it relates to the risks that are being exhibited nationally and globally. So to the left of the slide, you see the global risk reports for 2023, and you see what it has been estimated to be over a 2-year period and then a 10-year period. So even if you can't read it, you can see the greens. Anything highlighted in green is an environmental issue. And that speaks to the E, which is in the ESG for sustainability. Now, if there's any organization, including a financial institution, including a bank, who is not looking at these top 10 risks and seeing how their business model is going to change to either address the risks or identify the opportunities that are going to be gleaned from these risks, then I'm afraid you're wasting your time. Because if you don't look at this and use it to help shape the future, then you will certainly be left behind, as I said before. Now, there are also opportunities in this space that I think it's important for everyone on this call to start to recognize. And when you go back into your businesses, see how you can use it to change your strategy, change your business model, or change the activities that you're involved in. There's very heavy focus on Africa, and I prefer to do this way so that we see how it relates to what we're doing at home. But generally, what you're noticing is the opportunities in the green industry. So when I talk about green industry, it's looking at all the renewable projects that we're talking about, climate smart activities in agriculture, regenerative agriculture, looking at solar, etc., etc. That's the space that I'm talking about. The opportunities are immense. And this is the best time for everyone to take advantage and start to understand what sustainability or ESG would mean to your organization and how, particularly as a financial institution, you can use that to build resilience into your organization. So I wanted to give a practical example of what's being done in Fidelity Bank so that it really brings the message home and you can have an example of what to do. The department that I had came into being in October 2022. And in order for us to really set out what we wanted to do with sustainability and leverage on the opportunities that we identified in the sustainable finance space, there were a number of steps that had to be taken. So you can adopt these steps, or you can just use it as a guide and then revise it to suit yourself. Key for us was the internal research that we conducted. So we had to determine as a bank, where were we as at October 2022? We had to review our products, review our understanding of sustainability, sustainable finance, which is a big issue, right? Because that is a rapidly evolving space, and you're speaking to financial institutions and employees and staff who have worked a certain way for a very long time. So that internal research is key for anyone who wants to start on this sustainable finance journey. The next step, which is actually part of that research, is what we call the double materiality assessment. So just to summarize, what is the impact of this bank's activities on our stakeholders? And what is the impact of our stakeholders, the external, on the work that we do across E, S, and G? So from there, you can prioritize the areas that you want to focus your attention on. For us as a bank, we found that local economic stimulus was key. And to translate that, basically, we decided we would invest a lot more in SMEs. And that would be the foundation of our sustainable finance portfolio. So having prioritized the ESG issues, and remember, I'm just delivering a very narrow focus, which is focused on sustainable finance. There are other things that we do regarding social issues, charity, or environmental issues when it comes to our operations. That's very different. But in terms of finance in particular, this is what we decided to do: focus on SMEs, develop our strategy, and then also work around developing the relevant policies, procedures, and systems to help us in-house, right? So we worked on our ESG and impact policy. We recruited the right staff to come in-house, and getting the right staff with the competencies is quite challenging, but whoever's going on this journey, my advice to you is to try and get those who have a development background and possibly get them on to start with CGIA courses so that you can have that blend of development knowledge and finance, and then you can leapfrog when it comes to rolling out sustainable finance activities in your organization. Key as well in our journey was impact measurement and management, because there's absolutely no point in starting on a sustainable finance journey if you cannot measure and then disclose what you are actually doing in your organization. And there are lots of frameworks and reporting standards, I'll talk a little bit about that later, that you can use. But you need to ensure that you have the right data with the right data quality, should be accurate, it should be comprehensive enough so that you can provide the relevant disclosures for your audience. And remember, your audience is both internal and external stakeholders. So just a little bit I mentioned before on different regulations, frameworks, and disclosures. If you're at the beginning of your sustainable finance journey, just go and understand the Sustainable Development Goals, right? It's a good framework for you to wrap your head around how sustainability works and what you could be investing your time in with regards to developing a strategy. Read up on the Equator Principles. Global Reporting Initiative is a disclosure process that you can use. You can also think about signing up to different UN bodies. So we are a signatory to the UN Global Compact. We are also a signatory to the UN Environment Programme for Financial Initiative. And specifically, that's for responsible banking, right? Principles for responsible banking. So that has a number of principles that we need to adhere to. We're also signatories to the Bank of Ghana Sustainable Banking Principles. Those are 7 principles that we need to adhere to. Now, if there's anyone on the call who's really on the investment side, you could also look up the principles for responsible investment. There are other standards for insurance, etc., that you can look up to. It would also be very useful for you to think about how you are assessing your sustainability risks and opportunities and using that to drive your sustainable finance strategy. So you can look at the Task Force for Climate-Related Financial Disclosures, Task Force on Nature-Related Financial Disclosures. These are all very, very important to the work that we're doing within the Sustainability Department. And I think it's also very important that you start reading up on IFRS. So IFRS has brought up what is called ISSB, International Sustainability Standards Board, and they have new disclosures. And if you really want to be serious about sustainable finance, you need to get to grips with the impact of those disclosures on your organization. In Ghana, the Association of Accountants have informed us that they will be early adopters of the disclosure standards. So what it means is that as a bank, very shortly, we would have to be reporting on standards relating to climate and then standards relating to sustainability in general. So these are some of the things you need to think about. I want to end with giving you real-life examples of what we do when it comes to sustainable finance. Our focus in that space is supporting SDG-related projects. So there are a number of SDGs that we have identified as key for us, including economic development and climate finance, right? So what we do is we tend to provide blended finance to SMEs. And by blended finance, I mean we have a partner, a DFI, who gives us a grant, and we mix with our commercial financing so that we are able to on-lend at cheaper rates to our SMEs. Now, this is under what we call the Fidelity Young Entrepreneurs Initiative, where we're able to give loans at a 5% interest rate. So if you're in Ghana, you know our interest rates are above 30%, right? So if you walked in to a bank and you wanted to get a loan at a commercial rate, it's very high. But under the sustainable finance portfolio that we have, which is driving blended finance, we can afford to give you cheap loan where you're paying 30%, is in grants, so you're not even repaying that. We're looking at the 70%, and it's a maximum of 5% interest rate. So when we talk about the products, the financial instruments that sustainable finance can be used for, these are some of the examples. There are other examples that I'm sure my colleagues will talk about: sustainability-linked loans, sustainability-linked bonds, green loans. All of these are classed as different products depending on the usage of the funds. So sustainable finance really, it presents an opportunity for all organizations, particularly financial organizations and in the financial sector. And just to wrap up so that I can delve more into the Q&A as questions come up, you cannot afford not to understand sustainability at this point in time. If you decide as an organization that you are maintaining the status quo, you'll be rapidly overtaken by everything else that's happening. Because even as a financial institution, when you're going to engage with potential partners, they look at your sustainability credentials. They ask those questions. I need to sit in those meetings. It's no longer a question of the treasury team sitting in those meetings or the finance team sitting in those meetings. Sustainability is now a C-suite conversation. So just in summary, do not maintain the status quo in any organization that you're in. It's good that you're joining this presentation today, this discussion, and we're hoping we can give you more insights into what you can do along your CGIA journey. Thank you.
Thank you so much, Nana. That was quite insightful and informative from your end. Now, I did request all the panelists to please switch on your videos. Let's shall take a photo for the cover page of the summit.
Sanskriti, can we have your video on? Good. All right, so we're taking a photo. Everybody smile. Okay, good. Sorry, one last one. All right, thank you so much, everybody. Thank you.
Thanks, Kirti. Okay, so let's move on to our next presentation by Olavuni. Olavuni, please go ahead with the presentation and your insights for the
Thank
same.
you very much. Gifty, could you please help me with the sharing? Could you help me share your screen, please? Okay, so while we wait for Gifty to share the screen, I think I'll just quickly share a bit about an organization called Brockville Investments. So one of the key things that we do at Brockville Investments is we usually are companies focused on the energy and natural resource space, and what we do is provide project finance advisory. But we have a very important platform called Outlier Venture Lab. And basically, we look at Outlier Venture Lab as a platform where sustainability meets with innovation. So Outlier Venture Lab is a venture building platform that really and truly connects and helps to develop SMEs and project developers in the climate and the renewable energy space. And what we're doing at Outlier Venture Lab is to help them prepare to build sustainable businesses, to be commercially viable and investment ready. So basically, it's we look at ourselves as a bridge, between for funders, financiers, and investors, for them to build a very viable pipeline of sustainable projects. So we understand and we know that climate change is here and it's undeniable, and we need to have an approach to innovation that helps us help the projects that we support to scale rapidly and to become investment ready. And so at Outlier Venture Lab, we focus on key sectors. Like we have a product for Outlier Grow, which is focused in the agri space. We have e-mobility, that's Outlier Move. We have Energize for the energy space. We have a product for manufacturing, construction. Earth, which is the mining space, has been really known to be one of the most, call them the most people that pollute the environment, especially the mining sector. And of course, we have another product for health. So everything we do is tied to helping drive innovation via venture building. So that's Outlier Venture Lab. But I'll quickly delve into my presentation today on sustainability. And I'm really grateful to the speakers that have spoke before me, because they actually made my work extremely easy, and everything I'm going to say will just basically be a repetition of what they've said, but perhaps from a slightly different angle. So could you move to the next slide, please? And the next one. So this is the other slide was just the outline of the presentation, where I will have an introduction, talk about investment strategies generally. So, but in the introduction, we've heard ESG is a term that is very common and has become increasingly familiar, and it's a kind of complex landscape. Why? Because it keeps changing. It's intricate, and as a result, businesses that want to launch their sustainability journey, it might be a bit intricate to them. But if you want to navigate the landscape of sustainability easier, I think it's nice to start with a very simple definition. So for me, ESG answers the question, how do we assess a company's performance and impact on the environment, the society, and governance? So ESG criteria are like a set of standards for a company's operation that socially conscious investors use to screen potential investment. So basically, we want to classify projects in a logical and clear way that wants to see the distinction and the interaction between the three key drivers of sustainability, which are the planet, the people, and the business. So the environmental criteria considers how a company stewards nature, which is the planet. The social criteria wants to see how your organization is interacting, managing people, your employees, your suppliers, community, and customers. So, of course, that's the people. Then the final part is the governance. So you want to see how the company leadership is focused on what is executive pay, audit, internal control, shareholder rights, and what have you. So ESG might look at as a daunting task, right? But it can be, because sometimes people look at ESG and they begin to think of, okay, is ESG corporate social responsibility, or is ESG the SDG? Well, no, those are different terminologies. So you just need to understand that there can be multiple criteria, but you just need to know that there's a distinction, and ESG focuses on the people, the planet, and the environment. Okay, next slide, please. Now, let's take our minds a bit away from the reporting, because there are several standards, and I don't want us to focus so much on that. What I want us to focus on is, what does ESG seek to achieve? At the heart of ESG it seeks to focus on value, the value that they can create. So here, I want to make a case for ESG for whether a company, perhaps an SME or a startup or a corporation. And ESG really should be part of your strategy, your business strategy from the very, very core, because it will help you enhance. I mean, there's several things to help you do, but for me, the core is that it will help you enhance your brand reputation. The core of ESG is about making responsible business practices that helps breed trust of stakeholders, including the community you serve and your customers. So imagine if you know two companies and one of them operates a factory and everybody in the society knows that they have poor working conditions. Perhaps they're even bringing underage children to work, or they don't give their staff the right benefits, they overwork their women, people are talking about them. Whereas there's another company that operates and you find out that the staff are getting benefits, some of them are giving flexible work conditions. Somewhere in your subconscious, you begin to instinctively think of buying choices, favoring the other company that you seem to like. And that's the kind of reputation enhancement that ESG can help us lead to brand loyalty and stronger relationships. It can even breed potential collaboration that extend beyond even business practices. Now, another important business case I want to make for ESG is that it can actually help you save costs. It may be in the long run, but it could be a strategic financial move. Now, ESG's excellence is not just about doing good, because that's where we all focus on. But if you think about it from a financial perspective, you can actually enhance efficiency, you can reduce waste and optimize resources. So these sustainable practices can lead to long-term cost saving. So let's give an example here. Many manufacturing companies begin to adopt energy-saving measures. Some of them, especially in Nigeria, they're moving from diesel-fired power plants to renewable energy plants. Of course, the initial cost outlay might be much, but at the end of the day, they find that they're saving costs while they are actually helping the environment. So it truly benefits the environment, but also benefits your company's bottom line. The third point is that ESG can give you a competitive advantage. So the business landscape today, investors value ethical practices. So a company that is committed to ESG can basically set itself apart from competitors, because especially when you are vying for financing or you are trying to raise funding. So when potential investors recognize that your brand is genuinely dedicated to positive environmental and social impact, they are more likely to be interested and attracted to your brand. Finally, if you at the beginning or whatever stage you are, you begin to think about ESG and incorporate it into your business practices, it actually helps you meet and surpass regulatory requirements. So it helps you stay ahead of regulation, especially as policies are evolving, regulations are evolving. Traditionally, in the construction space, in the gas space, renewable energy space, there are documents that are regulatory and very important. For instance, the environmental impact assessment before you carry out or begin any work, right? But if your sector does not have such requirements, thinking about ESG before the government catches up with you is very important. So for instance, the Lagos State government recently, perhaps just about a month ago, they banned the use and distribution of single-use plastics, such as styrofoam. So imagine a business that has built its business model around that styrofoam single-use plastic. It's going to be a total game changer for us. It's going to be a total disaster for you. Meanwhile, there are companies that had started and have been using sustainable food packaging, maybe like paper or some other recyclable or sustainable food packaging. So for those kind of companies, they won't be affected by such government policy. So it's very important for us to be proactive and begin to embrace ESG even before the government policies catches up with us. So basically, you need to look for ensure that you are compliant and begin to minimize risks that are associated with non-compliance. with policies that exist, and you also be proactive to embrace ESG before policies come your way. All right, next slide, please. Okay, so in this next slide, I just wanted to talk about perhaps, 4 questions for integrating ESG into your investment strategy, into your business strategy. So what do you want to think about if you want to start saying, I'm starting from scratch, we've not really had some ESG policy? For me, the first question I want to ask myself is that what targets do I want to set? What ESG goals and targets do I want to set? So for instance, a mining company may set up a goal to reduce greenhouse gas emission by 25% over the next 5 years. So these goals, of course, as we know, we say we have to set smart goals that are specific, time-bound, and they're actionable. So that's the first thing that I want to do. The next thing a question I want to ask is what are the ESG issues that are most material to the business and stakeholders? So for that, I need to conduct like a materiality assessment to check with the stakeholders, including investors, customers, employees, to understand their concerns, to understand their priorities before we start saying, okay, this is how we want to define our own ESG policy for the organization. So basically, the assessment would also help you understand how climate change could even affect your supply chain. You know, for instance, the example I gave of how the government banned single-use plastic. If that single-use plastic was really very important part of your supply, for instance, if you are a retail supermarket, for instance, and you had to give goods to your customers, in the package is single-use plastic. If you had had that kind of policy or strategic assessment beforehand, you would have known that it will get to a point where the government could ban this, so let's kind of deviate away from it before it affects our business. So the first question is, how can we integrate ESG principles into the highest level of our company? So when I talk about the highest level of company, I'm talking about the board. So perhaps setting a committee within the board of directors to ensure that they are focused primarily on ESG, or even the existing board could just have a very important focus on ESG. Then the fourth one could be, how do I monitor? Because you want to monitor, you want to review, and you want to report. So transparent reporting is very key. There are several international standards that are used. And then you have to be sure that you communicate the work through a reporting framework that is very valid, and then continuously monitor the work and show the world that this is what we're doing. As at XYZ year, we were at a certain level, but we have improved over time. So because you want to show the progress that you are making, you want to show and document the adjustments that your organization is making. So that's also very key. All right, next slide. So yes, here I just wanted to talk a bit about how ESG can actually attract finance. So a strong commitment to ESG can really, and this is more like repeating what I had said before, because it can really and positively influence financial performance by attracting investors who prioritize sustainability. It can help reduce operational cost, repetition, and through energy efficiency, waste reduction, enhancement, enhancing your brand reputation, customer loyalty, and mitigating risks that are associated with environmental and social issues. So the next slide is just an example of a company that we all know that they've taken ESG very, very seriously, and the company is Unilever. And one of the things that Unilever would say about themselves is that they would say that they focus on planet and society. So they say we are a company of brands and people with a clear purpose to make sustainable living a commonplace. So we are determined to prove that our purpose-led future fit business models deliver superior performance. So the Unilever compasses their strategy to deliver growth through consistent and competitive profitability. So if you look at their work, they focus on climate action, they focus on protecting regenerative nature, they focused on recycling. So you see Unilever sponsoring programs or not-for-profit organizations that maybe like one of the clients that deal with street waste company, they pick up street waste. So Unilever sponsors those kind of projects. So different projects like that. Another focus that they focus on is the nutrition. I mean, their brand is about nutrition, so they focus on fertility nutrition. Then of course, health and well-being, the raised living standards. So they just define the organization in a way that the world begins to look at them as a brand that is interested in sustainability. A lot of oil and gas companies, this is another example, a lot of traditional E&P companies have also tried to transit. So for instance, Shell set up a program called All On, and they pumped a lot of investment for investing in renewable energy. So that's very key. You see Total Oil and Gas change their brand name totally to be called Total Energies, and they started investing in lithium for batteries. They started investing in wind energy, started investing in solar renewable energy. So you can see that many large corporations are being proactive, positioning themselves for the future of ESG. So it's very important for organizations that are not that big as well to begin to do the same before it catches up with us. Next slide, please. So I think that's my concluding slide. Next slide. So the conclusion slide just basically says that ESG is a journey, right? Okay, maybe I didn't put that up, but basically just to conclude, ESG is a journey. Just go to the last one that says ESG is a journey. And it's just telling us that the evolution of ESG criteria, there's a lot to it, right? The environment and even us businesses, we need to align our practices and our values. So you want to also align your financial goals to think about the environment and about how policies can, potentially put you in a position such as you need to be proactive even before the policies come in place. And while the policies in place, you need to make sure that you match with it. So here's this journey. It is not a destination. You need to take small steps daily that can lead to significant impact over time. So I just encourage you to get started with your ESG journey today. Thank you.
Thank you so much, Alavme. That was really insightful and informative session. I hope a lot of our participants got to learn from it. So lastly, I would ask Sejal to please go ahead with your presentation.
I'll just share my screen. Is my screen visible?
Yes, it is visible.
Yeah. So here at Black Soil, we take ESG very seriously. We are a alternate credit platform. We give credit to growth stage companies and to FIs and NBFCs, and we also have a separate supply chain financing department. So we have disbursed over 4,500 crores since 2017. Just a minute. Yeah. So while onboarding any deal, any company, while giving them credit, there are two steps. First is the financial DD, and the second is we are practicing ESG DD while onboarding any portfolio company. So it happens in three phases. So first is a team. Just a second. Just give me a second, please. So while onboarding our team, while onboarding a portfolio company, we have an exclusion list through which we have created an exclusion list through which if the company is not compliant, let's say we had a company, I'll focus more on the case studies. So we had a company that was an MFI, but its parent company was into cigarette manufacturing. So we had to reject that portfolio because it was not ESG compliant. So we do take ESG very seriously at Black Soil. And the second is investing process. So once the exclusion checklist is done, we send them checklists according to the sectors, and we take down their details. Uh, there are two checklists that we send. One is ESG specific and one is sector specific. So Black Soil is a sector agnostic platform. So we provide credit facilities to MFIs and BFCs. There are various online marketplaces that we have provided credit facilities. So according to that, we give them rating, and after giving them rating, we prepare an ESG assessment report for them. And once the report is done, we assess the risk areas, and we communicate it to the company, and further we guide them on implementing to how is ESG to be implemented into their businesses. And then we also follow a review process. So we make sure after a quarter or 2 quarters, we go back to them, we take sessions with them, and we make sure that whatever areas of improvement we have suggested, we make sure they follow those areas of improvement, so that their company is more ESG compliant. So yeah. And the current landscape of sustainable finance is such that in India, um, we focus on, and Black Soil focuses majorly on NBFCs and MFIs. So these companies are majorly operating in the Tier 2 and Tier 3 cities in India. And here, according the the environment is such that only the top 100 companies are supposed to prepare a sustainability report or such. So these the industry is not yet aware that ESG can really help them to get international investments. So we provide continuous ESG guidance to these companies, so that they are more ESG compliant. The next phase of ESG of sustainable finance can be, as per Black Soil, we are focusing more on the green bonds and the solar financing programs. We have, I think, almost 7% of our companies are providing energy loans, green loans, and these companies are giving energy loans, but they are not aware that they are actually creating an impact. So it is really important that we highlight it to them that this is creating an impact on the country and overall globally as well. So global collaborations, I think, for the next phase is really important. It is really important that we as countries talk to each other and share ideas, because recently government of India has launched a new scheme of to install solar panels in the middle income group households. So this can save electricities in the Tier 2 and Tier 3 cities of India, where electricity and water supply is a big problem still. So I think such global collaborations and sharing of ideas will help us to grow together. Now, technology integration. It is really important that we adopt technology, we adopt new ways to run our businesses. One such technology integration can be green buildings, installing solar panels, water management, waste management, and um, adding um, adding softwares and tools to our systems um, to be more efficient. And investor engagement, so as in Black Soil, our investors, our top management, they are very much inclined towards ESG. Every board meeting there is a separate presentation on ESG, and they are very much interested in ESG. And I hope that there are many more companies like Black Soil who really look into the matter, and they take ESG as seriously as they take financials during while onboarding a company. So yeah, the challenges faced while implementing ESG into corporations can be data collection and management. Since any company, if there is any deal, the major focus is always on the financials of the company and not the E, S, and G factors. But this has to be changed because these factors matter a lot. For example, we have a portfolio company. It was a network. It was related to a network company. It was a network company, and they did not. They did not take care of their fire extinguisher properly, and there was a fire at their branch, and there was nothing that they could do. And this gradually lowered their profits for that financial year. So it is really important that we look into these matters as well while onboarding uh, any company, giving credits to them. So yes, so data, while data collections, there should be a specific checklist. There should be specific checklists in place to look into these so that nothing is missed while onboarding any company. So next is greenwashing. Now, greenwashing is a very big problem when it comes to our sector as well, because ESG is buzzing term, but not many companies know what really is to be done. And many companies are such that they only show that they only say that they are practicing sustainable they are practicing sustainability, but they are really not. So this compliance is very important when it comes to greenwashing. Now, lack of standardization. When any company is starting their ESG practices, um, they don't know where to start as there are so many regulations. So it is important to find one simple standard of reporting and then following it. I think the easiest is the UN SDG goals, and further the GRI guidelines. So yeah, and the third is transparency. Transparency and greenwashing are interlinked, I believe. Uh, yeah. Now, we have over 175 deals at Black Soil, and this is the impact that we have created on our portfolio companies. So we have 40 million customers of our impact portfolio, of which 28% are from economically weaker section of the society. These are from tier 1, tier 2, and tier 3 cities of India, where the companies are providing financial aid through which the customers are were able to establish their own business and hire new people for their business or expand their business. And 29% of them are from low income background, and 66 million are our total customers, from which 35% are generating indirect in 37% of our portfolio companies are generating indirect livelihood by supporting SMEs, and for these many are the farmers. We also these 6k thousand customers from farmers from our supply chain financing, they had been our number one customer. and 60% of our portfolio companies are operating in Tier 2 cities. It is really, and these customers from Tier 2 and Tier 3 cities are have they are engaged in agricultural activities and continuous we measure their continuous business growth and everything, and these NBFCs have included tech into their operation. So this is really big that these companies running in the rural areas of India are using technology to run their businesses, and the customers as well are using these technologies to get financial aid. So next, moving on, since it is a women in finance event, I thought I'll put a slide on the women that Black Soil has benefited. So till as on December 23, we have benefited 1 crore women by giving them financial aid, and 75 lakh were provided with financial aid. And we have a portfolio company named Battery Smart. It is a battery swapping company, and they also onboard drivers. Out of the total drivers, they have onboarded 300 plus women drivers, so they have given them income generating opportunities. 15% of our portfolio companies have women as their founders or and co-founders, and 29% of them have women on board. And we continuously encourage our companies to get a woman director on board or get an independent director on board. Be more compliant. Um, we It is not necessary to have an independent director on board before the company is public, but we still encourage them to do so. And 50% of our we have 6 healthcare companies, out of which 50% are providing specialized healthcare products for women. So that is again a great deal. So I have 2 case studies to showcase from our portfolio companies. One is Swasti. Swasti is one of our most ESG compliant companies. It has 140 branches, and they are 20% are operating in Tier 2 and 30% are operating in Tier 3 cities. One of their branches, the entire branch is led by women. From the sales team, sales being a male dominated department, they have all women in the sales team as well. They have served over one they have served over 1 lakh farmers, and they also provide water and sanitation loans in the rural parts of India. And they have a very good they were also in the case study of 60 decibel in March 2023. So that is one of our portfolio companies. And the other one is Battery Smart. As I mentioned, it has 300 women drivers, and it is also helping women drivers for income generating. It is encouraging them to for income generating purposes, and they have covered uh, these many clean kilometers. So yeah, so that is about Black Soil. If you have any questions, I'll be able to answer them. Thank you.
Thanks, Sejal. That was really insightful and helpful. I hope our participants got to learn through it. So now thank you to all the panelists for presenting your views and helping people learn from the same. We shall now move towards the Q&A session. So the first question I have here is from Simon. He asks, what kind of business issues will affect a company that is in the IT space? Can any of the panelists please answer the same?
So I can take that up. I think if there is a I'm audible, right?
Yes, yes.
Yeah,
Please
okay.
go ahead.
Great. So, yeah, if a company is operating in the IT space or anything that is related to SaaS or technology related, where their main product is a service, probably, their environmental impact would be comparatively lower as compared to any other company or any other business that is operating in a manufacturing or let's say having a tangible product, end product that lies with the customer. So in this case, if the company is the scale and size of the company, if it has more employees, then the company should be focusing on a lot of social related, social factors, like what kind of policies they have in place, what if they have proper HR policies, if they are compliant with all the necessary laws and regulations locally, globally as well, depending upon their investors, depending upon where they are, their operations are and everything. And apart from the social factors, one of the key risk that they can face is related to data security. If they are capturing or storing any private data of the customer, then do they have proper policies in place that is able to secure that data? Otherwise, they can definitely land up in a lot of regulatory compliances trouble related to that. So from an ESG standpoint, if we have to score all the risks out of 10, then E would be probably 3 out of 10, S would be 7 out of 10, and G, which is governance related, which is related to all the policies and procedures, standard operating procedures that they have in place, that would definitely be 10 out of 10, because that's a major risk that they can face.
Okay. Thank you so much, Sanskriti, for answering the question. Simon,
Yeah.
I hope you got your answer.
Well,
Okay,
I'd like to
so
add just a bit to that, if you don't mind.
yeah, please go ahead.
All right. So I just wanted to add to what she just said, and I think another perspective we could look at in terms of the environmental issues. So it depends on the kind of IT organization they are, but if they operate data centers and some large IT infrastructure, they sometimes require energy consumption, so they need to think about the carbon emissions that may contribute to climate change in their data centers or IT infrastructure. Then another very important part is if they are a manufacturer, electric waste becomes a very big problem, because as we know, IT equipment becomes obsolete quickly. And so they need to think about what their end users are doing with the product and how they can also contribute to recycling electric waste, disposal of electric batteries, components that are very, very important. So yeah, thank you.
Definitely. Thank you, Alamni.
Hi,
Okay.
Divya. Sorry, I just wanted to chip in there, exactly to the point, the just most recent point. Sometimes we miss out on the impact of our supply chain, right? So the IT organization itself may not necessarily have key material issues, but then as soon as they look at their supply chain, then they realize where the risks lie. It's very similar to a bank. A bank may not necessarily have high issues, but as soon as we look at our financed emissions, right? The organizations that we're giving the loans to, then you realize that it's a wider scope in that space. And the point around the data centers is very, very key. So that's something that the IT organization should look at, and also think about investing in becoming more secular, speaking to the point around the if it's a manufacturing organization, the products that they deliver. If it's a service as well, I know that at this point in time, there are some software that actually use different levels of electricity, right? And that speaks to your energy use as well. So it depends on the IT organization, but they need to do a lot of investigation and look deeply in their entire supply chain.
Correct. Thank you so much. Thank you. Okay. So next up question we have for Nana only. It's from Eunice. Okay. They want to know like what role do investors play in promoting sustainability through finance, and how Best Fidelity Bank can assist young entrepreneurs in Ghana with startup business ideas but no capital.
Okay, all right, thank you. Thanks, Eunice. So really our focus isn't for businesses which are at the ideation stage, Eunice. There are lots of incubators who deal with those types of firms. We tend to like businesses who have been in operation for maybe at least 6 months, right? And we have two projects that can help such SMEs. There's one called the Orange Corners Innovation Fund, where you go through a 6-month accelerator process, and then you come to pitch, and then we provide you with the concessionary funding that I was talking about at 5%, and then a mentor, and then we help you with capacity building. Now, we hope that you can then graduate to another component, which is the Fidelity Young Entrepreneurs Fund. And with that, that's Fidelity's own ring-fenced funding towards SMEs that are growing. And that's a 10% interest rate that's given to the SME. So for those at ideation stage, we prefer not to test those waters. There are different incubators for that. But to the first question around investors and their impact in the sustainability field, right? So one of the key things is this thing called the principle of influence. And I like to talk about it a lot because that's what the financial sector has, including our investors. So we have 2 impact investors on our board, right? And the impact investors, as you can imagine, coming in to invest in the organization, the due diligence was very high when it came to sustainability activities. And every year, I need to report on our sustainability activities to our 2 investors. So if I'm not doing the work, I have nothing to report. And that's a negative impact on the business itself. And that's that principle of influence and how it affects sustainability within my organization. In the same way, if a bank is giving a loan, so not necessarily like an equity investor, but it's just debt. If I'm giving a loan, people might not know this, but every business loan that comes to a bank, particularly Fidelity Bank, we need to do an environmental and social risk assessment of the business. So what are you using the funds for? What is the scope of the business? We do due diligence in terms of, do you have all your permits, your regulations? Do you have your business operating permits? If it's something to do with the environment, do you have your Environmental Protection Agency permit? If you are importing items, if you got, if it's a food industry item, it's Food and Drugs Authority permit, all of those issues. If it's into solar, do you have your permit from the Energy Commission? All of that. So when we check these, and I actually have to sign off for certain levels of categories of businesses. So that's how that investor drives sustainability in our organization, and we in turn drive it within the businesses that we finance. So that's the chain, right? That's the sustainability chain of which we are a key part of. Thank you.
All right, thank you, Nana. Okay, so another question we have from Barbara. They want to know, how does ESG affect the bottom line, strategy and innovation? May I please request the panelists to answer that one? Sejal, would you like to go ahead with this question?
Sure. Just for the question once
Do you
again.
want me to repeat the question?
Yes.
It is, how does ESG affect the bottom line, strategy and innovation?
So I think ESG factors can affect a company's reputation, brand image, customer loyalty, employee satisfaction, which ultimately impact the bottom line of the company.
All right, thanks,
Yeah.
Sejal. Would anyone else want to add on to this one?
Yes. All right, so I think I spoke during my presentation on how ESG would affect or could potentially affect your bottom line. So for instance, I mentioned cost reduction and efficiency. So for example, even changing our light bulbs from the old emitters to the energy efficient bulbs is a way that it could be very minute, but it results to lower utility bills and potentially depends on how big that is. And something more major could be moving from, well, I don't know about other countries, but for us here in Nigeria, the cost of diesel is very expensive. So moving to renewable energy can actually help you reduce your electricity cost. And at the end of the day, that's pure bottom line material, right? Another point is, if you think about ESG as a way to redefine your business model and find new markets. So it can actually add to revenue growth in that manner, because you begin to find new markets, new business opportunities, and you begin to see ways where you can do business in a different way, and that can actually potentially add to your bottom line. So yeah, that's it.
Okay. Thank you, all of you.
Sorry,
That was really
just to
insightful.
add, Divya,
Yeah,
just to add,
yeah, please.
you know, when you think about it, I think we need to start moving away from thinking sustainability and ESG is something separate from an organization. It's really about just doing good business. If you divvy up or you go into the components of environmental issues, social issues, governance issues, and you take off what you're doing, everything you're doing is contributing to making the business be a good business. I'm not necessarily talking about doing good in society, but the business itself becoming resilient, improving your profitability. As Olua said, Olawumi, I butchered your name, apologies, said, contributing to your bottom line, right? Making you profitable, making you access new opportunities, new markets. Look at this green economy, look at solar, look at renewables. Whoever thought that oil and gas organizations would now be looking at new business models when it comes to renewables? So it's really, we should not think it's separate from being strategic in your business, right? It should be core to your business. It is just another way of you identifying, you're scanning your environment and seeing, these are the new risks in my environment when it comes to environmental issues, social issues, governance issues. These are the new opportunities. How do I change my business model, my business strategy to take advantage of new opportunities? So maybe we need to start reorienting our minds around what sustainability really is and how it helps businesses. So thank you.
Yeah. Thank you so much, Nana. Sanskriti, would you like to add on to it?
So yeah, I think I completely agree with all the panelists, and this is something that I mentioned during my presentation as well, that ESG as a concept might seem very alien and something that is very compliance heavy to a lot of businesses, especially small businesses, because that's how it has been bundled, and that's how it has been sold across different to these businesses in form of regulatory compliance. So it seems like a burden, but I completely agree with Nana when she says that this has to be integrated with the core business operations. ESG is nothing but good business practices. It is something that makes a business resilient enough that it's able to tackle all the risks that it might face. It might be facing right now, it might face in the near future, and also tap into the various opportunities that can come in, especially when it comes to bottom line, especially when it comes to cost reduction, new product development, identifying new markets, fundraising as well. That's absolutely important, that the kind of demand that is coming from investors for these for startups and for small businesses in terms of their compliance, in terms of their business strategies relating to their environment, social and governance practices, that is absolutely necessary that businesses start looking into such practices so that they're able to attract new consumers as well as new investors as well.
Correct. Thank you. Thank you so much, Sanskriti. Barbara, I hope that answers your question. Okay, so next question we have for Nana again. Dennis wants to know, with the various approaches to environmental reporting you highlighted, wouldn't there be too many standards to deal with? Is it advisable to stick to just one, for example, GRI only, or probably IFRS, ISSP? And please, is it mandatory for financial institutions in Ghana to comply with ESG? Because you mentioned your organization is a signatory to BOG sustainability something. Thank you.
Thank you. Yes, so to start with the second question first. In 2019, the Bank of Ghana, who is our regulator for all banks, set out the sustainable banking principles. There are 7 principles, but in essence, 6 of them, and then the 7th one is on reporting. And there are also supplementary guidelines for specific industries, agriculture, mining, power industry, etc. And all 23 universal banks signed up to it. So every bank is supposed to work towards it. In 2019, banks were given 4 years to embed the principals in their organizations. But remember that soon after there was COVID. So that's like 2020, and we came out of COVID when 2021, 2022. So every bank is at a different level of maturity, but all 23 universal banks signed up to it. Bank of Ghana has been asking for half-yearly reports. So twice a year, I send reports to Bank of Ghana on the different principles that they put together. And I know that very soon they would come on for site visits, etc. So yes, the short answer is yes to that point. The second question, the first one that you posed around the standards for reporting, etc., it's always been a challenge, right? The sustainability space, I'm sure that a lot of you would have heard this phrase, alphabet soup. So there's so many different standards, there's so many acronyms. Sometimes if you're new in the space, you get overwhelmed. And I think that the purpose of the IFRS ISSB International Standards, Sustainability Standards Board, the whole purpose was to unify those different disclosures to help us in the work that we do. So, but GRI, Global Reporting Initiative, is not part of ISSB at the moment, but they work closely together. So in our bank, this is the first time we're going to issue a GRI light sustainability report, because we're not getting any third party to verify it. So it's not going to have that verification stamp per se, that is GRI, but we're using those guidelines. Once we have a better understanding of IFRS's ISSB, the two standards and disclosures, S1 for general sustainability, S2 for climate-related sustainability reporting. Once we understand what that means, we would move to it, because that is the standardization that the world is moving towards, and it helps us with comparability, right? Because if your organization is using different standards and I'm using a different one, it's difficult to compare and see who is doing well when it comes to sustainability. So that's the plan that we have. But it's good for you to understand the general landscape, and then your organization decides the path that you want to go towards. But internally for Fidelity Bank, we're working with GRI, but we will be moving to S1 and S2 from ISSB, maybe from 2025 or a bit later, once we understand it. Thank you.
All right, thank you, Nana. Would anyone else want to add something to this? All right, so thank you, Dennis, for asking this question. Hope Nana's answered all of your queries. Next, I will move on to the question by Alexander. They want to know that what course can you recommend for me as a credit manager to undertake for a start? Olavumi, would you like to answer this one? Olavumi, am I audible? Okay. Sanskriti?
Yeah, you might want to repeat the question. I actually didn't get it.
Okay, sorry. Alexander wants to know what course can you recommend for me as a credit manager to undertake for a start?
What force?
What course?
Acha,
Course,
course.
I think
Sorry.
they might be asking for a degree or some professional course. Yeah.
Okay. So I think as a credit manager, I would say, and one of the most credible one is the CFA ESG investing as well, because it talks in detail about portfolio evaluation and how to do portfolio assessment from ESG perspective. So that is something, but depending upon the level of knowledge and level of experience, I always suggest, because there are a lot of people on LinkedIn personally as well who keep reaching out to, understand how to start their career in ESG, or how to start, building their knowledge in ESG so that they're able to contribute in their work towards this front as well, and efficiently too, is maybe to start with some basic courses that are available on, Coursera. There is a lot of material available on GRI and UNPRI websites as well, on UN SDGs as well. So to start with that as basic foundation, as in when you are able to, develop that kind of expertise, move to more specialized ones, like maybe, something like an SCR or climate risk investing or CFA ESG investing courses like these.
Okay. Thank you so
Yeah.
much, Sanskriti, for answering
Sorry,
that.
I think I was muted earlier on, so I thought I was speaking. Yeah.
Okay.
So yes,
Please go
I mean, I
ahead.
quite agree with her on the recommendations she has made. Going to Coursera. She could also, or yeah, she could also check UNCC eLearn. There's a free course on Introduction to Sustainable Finance that could be useful. And then there's a Corporate Finance Institute. They have some certifications if the person wants to delve a bit deeper into maybe financial modeling, focusing on sustainability or all that. So that might just help.
All right. Thank you, Lavanya. Alexander, I hope that answers your question. And you could also please reach out over LinkedIn to our speakers if you have any more concerns regarding the same. Okay, so we have another question from Nepal. They are asking what is role of women in climate finance? So, Sejal, as per your presentation, I could see you mention about women in finance a lot. So, would you like to answer this question?
Yeah. So I think the role of women in climate finance is uh, is at a medium level right now, but we have to ensure continuous practices to increase the graphs. As of now, uh, the women in the leadership roles are very few. We have a company in pipeline. It is a climate tech company, but on its board there are more number of men than female. This is also because the engineering department is male dominant, I would say, uh, on through a certain extent. So it is really important to bring a change at the education level first, so that the women choose such courses, and further they take up careers to be in the leadership roles, and also contribute to climate finance in the future. And
Yeah, and I'm also hoping that as per your presentation, there were already a lot of women that you discussed about who are already
yes,
contributing towards that role, right?
yes.
So, is there anything in particular they're contributing for the, let's say, climate changes or climate crisis? Anything you
Um,
want to comment on?
mm, not not that I know of, but we do have women leaders. Talking about our company itself, we have almost 40% female in our organization, and over 40% of them are in the leadership roles. So we ourselves, we are practicing it first and then preaching about it. So I think, yeah.
Okay. Okay. Thank you so much. Thank you, Sejal. Okay. So I personally have a question for our panelists for the day. It's a small question, but I think it will leave a huge impact regarding the ESG presentation and summit we have had today. So my question is like in this fast-paced world, what do you think can a company's ESG commitment influence its financials? Because as we have seen that today's companies are contributing a lot towards the, ESG part. So obviously they have some sort of cost that they have to bear for the same. But again, at the same time, especially in the post-COVID era, we are seeing that a lot of companies are commenting and there are layoff going on left and right. A lot of companies are commenting that they are not able to, hire new employees or keep their current people going. So they are letting go of that. So how would you like to comment on this, that amid of all the cost cutting and post-COVID era, the company should be contributing towards ESG, or how much they are already contributing, or what more changes or any kind of influence it could have on their financials, both positive and negative, whichever you would want to discuss about it.
Okay, I think I'll go first, and this it's a very interesting question, and it brings us back to the initial discussion that we were having about, and what Nana also mentioned is that this is ESG as against the popular perception. It is not something that is only compliance. It is not something that is only driven by regulatory requirements or only driven by investors. Of course, it is something that has been highlighted because of the regulatory, scenario that has been changing because of so many regulations that are coming in the US, more in the EU. So much is happening in India as well right now. And I'm sure there's a lot happening in the African continent as well. But this is not something that is just driven by this. The compliance requirement, the reporting requirement is being implemented because of these regulations. But ESG as a concept is something that is actually not very new. Maybe the term ESG, environment, social, and governance, is coined very recently, but sustainability, the umbrella that imbibes all of this, green financing, ESG, everything, it is actually very old, and it is something that has to be integrated with the business, not seen as something that is completely outside the business. Once it is integrated as good business practices in the business itself, it would not seem like a cost. It would not seem like, something for which you need to have an additional resource, something for which you need to have an additional cost center. It would not seem like that. It will seem very integral to the business, which will in turn, result in a long-term profitability, long-term revenue generation, long-term compliance with the regulations and everything uh, for the business. So in the short run, because of different kind of reporting requirements, different kind of frameworks, tools, and everything that are coming up, different requirements that are coming from the investors and everything, because of that, it might seem like a cost, but in the longer run, this is something that is eventually going to bear the fruit of profit for businesses.
Okay. So, Sanskriti, according to you, ESG is already a old stated program within the organization. It's not something new that has been introduced, right? And it's not cost bearing additionally. It's going to be profitable in the long run.
In the longer run, yes, but definitely this is something that is overlooked. It is not something that is imbibed in all businesses right now because, of course, due to consumer demands, due to the demands of, generating profit by investors and everything, I think uh, due to the increased demand of products and everything, this concept itself of sustainability was overlooked a lot, especially in the phase of industrialization, especially in the phase of growing production demands and everything. This is a concept that was overlooked, and definitely right now, the stage we are at, we are bearing the cost of it. And I think it is it is in our hands as industry leaders, as experts in this field, trying to understand where is it that we can integrate the concept of sustainability back again into the businesses.
All right. Thank you so much, Sanskriti, for answering that one. Okay, so I have one last question for the day. It's from Henry. He wants to know, is there any packages for credit union in Ghana? I think Nana, you might want to answer that one.
Yes, if I understood the question a bit better, I'm not sure what packages Henry is referring to. So yes, but if he's asking whether or not, for example, the banking principles relates to credit unions, the banking principles it covers all specialist deposit taking organizations as well. So if that's the package he's referring to, then Bank of Ghana, if they haven't engaged them already, and if he works in that credit union, they haven't engaged them already, he should expect that they will engage them. But if that's not the package, then maybe if he rephrases his question, I can better help him out.
Okay, thanks, Nana. Henry, thank you for asking the question. If you want more clarity, please reach out to her personally or any of other panelists over the LinkedIn as we are reaching towards the end of our summit. So once again, I would like to thank everybody, all of the participants, our speakers, and Gifty for organizing this summit. So thank you so much. And Gifty, over to you. Would you like to conclude this one?
Well, thank you so much, Divya. What an exciting session this has been. Very
Yes,
insightful.
definitely.
I'm particularly excited about how carefully the questions were answered by our speakers, our experts, right from Sanskriti to Sejal, Nanaya, Olawomi, and then our very competent moderator. A very, very big thank you. I cannot say thank you enough. This has been so insightful. The entire conversation is going to be uploaded on the CGIA Institute's YouTube platform. So every one of you who have joined us today, you can still get access to this conversation. And then, I mean, once you listen to it over and over again, you get to know. I'm sure today we are all living here with so much information on what our companies ought to do and the role that we all play when it comes to the ESG practices. One more time, on behalf of the CGI, I just want to say a very big thank you to all our speakers and then to our participants who have stayed with us all through. I mean, we couldn't have done this without you. Thank you for yearning for the information, the insights, the knowledge, and thank you for asking all the questions that you have always wanted answers to. Most of you were asking if you could get the contact details. I mean, it tells you how much they've been able to glean from our speaker. They were asking if they could get the contact details of our speakers. All of our speakers are available on LinkedIn. Please, they are very active. If you reach out to them on LinkedIn, you can pick up the conversation from there with all our speakers. If you're here and you really want to be a part of the CGIA Institute as well, you could visit our website, www.cgiainstitute.org, and then we could take it up from there. My name is Gifty Boatema, and I'm also very much actively available on LinkedIn for any conversation henceforth. Even before we go, I would want us to take one last picture. I couldn't capture so well the other time, I'm so sorry. Allow me, could you please give me your beautiful face as well? Great. I need every speaker laughing and smiling. Fantastic. Okay, great. One more time. Good. We are fine. So please, a big thank you to our moderator, Devia. Thank you so much
Thank you so
for
much for having me.
coordinating this effortlessly. In a way that we could share our views in the best way possible. Once again, on behalf of the CGI, thank you. This is a summit that we hold once a year. Where we get to hear the voices of women leaders, where we get to hear the voices of women who are doing all kinds of things in different industries. I would say that happy Women's Month to all women out there, to all our speakers, happy Women's Month to you, to our participants everywhere, happy Women's Month. And I want to say thank you to the men who have been supporting us, who have been ensuring that this issue of diversity, equity is being pushed from one level to the other. A big thank you, and until we meet again, of course, we have other webinars coming up. We have an in-person event coming up, but that is in Ghana. For those of you who are not in Ghana, I'm sorry. And we'll give you details on there on our social. So please follow us so that you can get all updates henceforth. Once again, a very big thank you. Enjoy your day.
Thank you, Gifty.
Very much. Bye, everyone. It's really nice to meet you guys.